been doing well and enjoying the summer. Uh, this was just a massive week. I think I say that in almost every video, but this was definitely a massive week with the 100 basis point increase here from the Bank of Canada. People most were expecting 75 basis point, but Bank of Canada went 100 basis points, and we'll definitely talk about what that means from a mortgage market perspective. I definitely want to touch a base a little bit about the inflation in the U.S. and we're expecting Canadian inflation numbers this week, the week of July the 18th. Also, what's going on with some of the big banks in terms of prime rates. I'll definitely talk about Canadian real estate as a whole, definitely on the holistic level, and obviously Ontario and BC. And a little bit about consumer sentiment. If you notice, gas prices have been trending down, but there's still that recession sentiment in the air, my feeling is. And I always love to hear if you guys have any perspective, please do share, as I've been talking about this with family, friends, and colleagues quite a bit. So again, guys, any comments, any questions, please ask me. My Twitter and Instagram handles will be in the description below. You can always reach out to me. I am a wealth management advisor. I specialize as a mortgage and a insurance agent. So if you have any questions for me, please reach out. If you're looking for advice, I always say reach out to your trusted advisor. Obviously, a bit of this is my perspective and the perspective of individuals who wrote this. So without a further ado, let's kick it off with this article from Wednesday, July the 13th. Bank of Canada surprises with massive 100 basis point increase. The Bank of Canada raised its overnight or benchmark rate by 100 basis points on Wednesday, a surprise move that exceeded economists' expectations as the central bank attempts to set a fire hose against scorching inflation. The unexpected and supersized increase comes after two consecutive 50 basis point increase and bringing the policy rate to 2.5%. This is the highest since 2008, and I'll show you a chart which really really visualizes that. And this was the first time they raised it by a full basis point since 1998. This clearly tells you what's the state in terms of inflation and why this is so important. And it was more aggressive than the 75 basis point hike increase most economists had widely predicted. With the economy clearly in excess demand, inflation high and broadening, and more business and consumer expecting high inflation to persist for longer, the Governing Council decided to front load the path to higher interest rates by raising policy rate by 100 basis points today. And just from a visualization, guys, check this chart out. Bank of Canada overnight lending rate, this is showing from 2007 to 2022. We're right now at 2.5%, and if I move it across here, the last time this was overnight was in 2008. That really shows you where the overnight rate has been since 2008. We've not seen this since 2008. I don't know what you were doing then, but it definitely is a big number, and I think most people, definitely if you're a millennium and you weren't paying attention, that is coming as a surprise to you. And really, this is coming on the heels, as I've been sharing with you, central banks, one of their main objectives is to control inflation between 2 and 3%. And obviously, they're missing that by, yards here. And this week, so this is an article, Yahoo Finance, July 13th, inflation surges 9.1% in June, most since November 1981. Caveat, this is US's inflation number that most imprinted. Canada's coming out July the 18th. Just a bit here, U.S. consumer prices in June accelerated the fastest annual pace since November 1981. And that tells you everything there needs to be. They need to get inflation in control, and until they don't see this number change or they have a pivot in their thinking, this storyline is going to continue and definitely be for the rest of the year. As we were talking about interest rates, I definitely want to talk about what this means to you if you have a line of credit, a mortgage, a variable mortgage, I should say, and also obviously if you have any, auto credit, for example. Big banks raise prime rates after Bank of Canada surprise supersized hike. This is from July the 14th. Just a bit here, the Canada's big five banks, along with everyone else in the industry, not just the big banks, Royal Bank, TD, BMO, Scotiabank, CIBC, all announced increases to their prime rate that goes in effect on Thursday. That was Thursday, July the 14th. Each bank says it will raise its prime rate by 100 basis points. So previously it was 3.7, now it's at 4.7%. And that's just a massive increase, guys. And you're going to expect this for the rest of the year. Their next rate announcement for Bank of Canada is in September. So we're expecting another increase then, but obviously the market's going to absorb this 1% till then. And now you're probably wondering, how does this relate to Canadian home prices and real estate market as a whole? As I've been sharing with you, as interest rates go up, house prices go down, and it's an inverse relationship. If interest rates go down, most likely house prices will go up. And I just want to share this a bit about you. This is from July 15th. Canada real estate home sales prices plunge from highs as interest rates rise. The Canadian housing market continued to cool in June, with sales and prices falling in the wake of rising interest rates. This is from the Canadian Real Estate Association, said on Friday that sales in June fell 23.9% compared to last year. Declines were across three-quarters of all markets in the country, led by the most populated areas, including the Greater Toronto Area, Greater Vancouver, Calgary, Edmonton, Hamilton, Burlington. Sales fell 5.6% compared to last month, marking the fourth straight month of declines, although June's drop was moderate than the ones we saw in April and May. I think June's has been more moderate as people are, they're enjoying life. They're on vacation. They're not worrying about real estate at the moment. The price of an average home has also fallen. CREA says the average price of a home in Canada fell 1.8% compared to last June, coming in at $655,000. While that marks a moderate decline compared to 2021, the average price of a home has fallen sharply since the record highs hit in February. Prices have dropped more than $150,000, or more than 18% from February to June. Sales activity continues to slow in the face of rising interest rates and uncertainty, and the cost of borrowing has overtaken supply as a dominant factor affecting housing markets at the moment. But the supply issue has not gone away. Read that first line again. The cost of borrowing has overtaken supply as a dominant factor. The MLS Home Price Index, which CREA says is more accurate price comparison than the median or average price, declined by 1.9% on a monthly basis. The decline is the biggest one going back to 2005, according to Bloomberg News. CREA says that the most of the monthly declines were seen in Ontario, but notes that the prices have also eased in parts of British Columbia as well. The real estate group says prices are mostly flat across the prairie provinces, while Quebec is now showing small signs of declines. Guys, you have it clearly here. In June, I think it was just 50 basis points we're coming off. Now in July, we're coming off 100 basis points. What do you think is going to happen with home prices next? My opinion, we're going to continue to see sales and home prices continue to come down until we finally get some stability, or the Bank of Canada changes its tone and its position in terms of interest rates. But please, if you have any comments, I'd love to hear what you guys think. Where do you see the real estate market going from here? I'm just going to pivot here quickly on a little bit about recession, a little bit about consumer sentiment and what we're hearing. So, the title of this article from July 12th, fear is setting in, gas prices could fall further as recession looms. If you notice, I've definitely noticed here in Ontario, gas prices are coming down. Gas prices in Canada may continue to fall this summer, but experts warn relief at the pumps may not last unless the global economy slips into recession. The average price for regular gasoline across Canada as of Tuesday has tumbled 19 cents per liter, or about 9%, compared to the average price in June. In many cities, prices plunged over the Canada Day long weekend. Ontario saw the steepest decline, and this is due to the temporary provincial tax cut, which came on July the 1st. So I've been talking a lot about with family and friends, potentially about a recession. There's been a lot of talk about potentially job losses, and obviously, no soft landing here. It's going to be a hard landing, and that's a technical term in terms of when you're changing the credit cycle. Right now, in pandemic, we had a lot of credit. Now there's much less credit, and what that means from people's livelihood. What does it mean from corporations? Are they going to spend the same amount of money as they have? And that's obviously going to have an effect in the economy and obviously on the jobs market, because those are the first corporations look to cut in terms of an expense and to control their expenses overall, or expenditures. So also on that same front, as we're talking about inflation and as us as consumers, this is an article from July 13th. Canadian food suppliers signal more price hikes coming to grocery stores this fall. So just briefly here, Canadian food suppliers are once again issuing notices to grocery retailers, informing them of upcoming price hikes. The letters signal more increases or price increases will hit grocery stores this fall. This year, that has already seen nearly double-digit increase in food costs. In some cases, the higher prices are due to the Canadian Dairy Commission's approval of a second milk price increase this year. Farm gate milk prices are set to go up about 2 cents a liter, or 2.5% on September 1st. Yet dairy processing companies appear to be tacking on their own increases as a part of it as they go on. And I just want to show you this, show this comment here from Saputo Dairy Products Canada. Also said that it will implement price increases in the 5% range, and it all depends on the category. So guys, we're seeing some adjustment here with gas prices. Now on the opposite of that, we're hearing from Canadian food suppliers that they're expecting to increase prices in the fall. I think most people are not paying attention right now because obviously it's the summertime. People are enjoying their lives, which is fair. Obviously, we've been in a pandemic for the last 2 years. So what I want you guys to take away from here is, very aggressive stance here from the Bank of Canada, and we're expecting that to continue until they get a hold of inflation. Inflation prints continue to come off as very hot. Obviously, you can see here 9.1% for the U.S. in June, and that's potentially expected to continue. We don't know, obviously, where the peak is. And the third is just overall the Canadian real estate market. It's it's definitely taken a hit. We'll see how it continues to go, and I'll continue to bring that information to you. And obviously, recession, where that kind of falls into. Are we going to see one? Are we not going to see one? And we're going to find out very shortly. Thank you guys for taking the time to watch this video. I hope you found it helpful. Again, any subscription will be much appreciated. All of the articles will be in the description below. Always reach out to me if you have any questions. I'd love to have a conversation. Thank you so much for watching, and I hope you have a great week and a great rest of your day. Thank you.